Yo, what's up, yo? That was weird. Can y'all see everything okay? Hear everything okay? Let me know. I've been having some issues. Yeah, let me know if y'all can hear me okay, see everything okay. All right. Morning, Tony. Let's wait for a couple other people to hop on. What's up, George? Hopefully y'all had a good weekend. Hopefully you guys didn't do too much yesterday. It was a bit crazy yesterday, but it's NFP week, right? All right, let me get everything set up real quick. So we've had a pretty aggressive London session. We got news at 7 a.m. So PMI, right? That's what I'm going to be waiting for. Unfortunately, we took the liquidity already. I wanted to kind of try to see if we could target that today, but I guess they had other plans, right? They wanted to get there quick. What's up, Henry? Appreciate y'all hopping on again. Hopefully, y'all had a good weekend and a good day yesterday. Again, NFP protocol calls for us to lower our frequency of trade and to be extra specific, right? It's not something to be fearful of, and you don't have to not take trades. But at the same time, you don't want to push too aggressively like it's a normal day. And we're literally in the midst of bombs being dropped and tankers being stopped and attacked, and lots of stuff is happening. Right, yesterday there was, I think it was right here. Let me see. I think it was right here. Yeah, it was right there. There was a huge wick. Actually, I think it was that one we talked about. One of my students took a loss from this because they entered and it just wiped them out. And it was one big candle, right? Like it didn't slowly, gravitate. It went one big 50-point candle, and it just didn't let people stay in. So again, this is a result of, first of all, it's NFP week. Second of all, we're in a climate where anything can happen. I'm surprised that it's going higher, honestly, because war doesn't necessarily push the stock market higher. Then again, at the same time, they're doing quantitative easing, which is money printing to stimulate the economy to make it look like it's okay. Gas is super expensive and all that. So, whenever you see the stock market, at least for the last, I want to say 30 years, just parabolic going to the buy side, like nonstop, you know that money printing is involved. We do have AI innovation and whatnot. So those are the leaders right now. They're kind of carrying the stock market, aside from the quantitative easing that's happening, which again is the government turning the money printer on. Right. So again, we'll see what happens with this, right? We have somewhat consolidation in here. Prices declined. We're not going to pick tops. So as ICT says, at all-time highs, you just keep pushing it higher. Now, unless this high to that low, that 50% level gets violated aggressively, then, that would then instigate our interest to come down here. But if we take a look at order flow overall, right, and what price has done up to this point, right, we could see that all this down movement was simply to get us to a discount. We closed above the 4-hour fair value gap, changed state of delivery right here, and then prices just now continued to keep racing to the buy side. Okay, so we do not pick tops. You can if you want, but I'd rather wait and follow ICT's instruction when it comes to trading at all-time highs, because, you know, you probably tried to pick tops and you've probably blown accounts. You know what I mean? Same thing with lows. You probably tried to pick lows thinking, oh, it shouldn't go any further. It's been so fast, just to find out that you were incorrect, and it can go much farther than it's already went. So again, very high risk environment. So you don't want to be too aggressive today. People don't like to hear that because they're like drug addicts and they want signals. But at the same time, those type of traders do not last long in this industry. So you got to make a decision, right? Do you want to last long and do things properly, or be like a drug addict? Right? So yeah, those are your two options, honestly. So again, we got liquidity down here. We have this high to that low that's now been eclipsed. So this range, if it's going to keep going higher, what we should see in terms of characteristics is the upper 25% get respected. It can come down into that, but again, as long as it stays in this upper 25% right here, we should be good. It has all the way to the midpoint there, but if that midpoint from this high to that low gets violated, then we got to consider this potentially turning into a market maker sell model, and they may look to try to dig it a little deeper. But you can see this large wick in here, followed by displacement, created a balanced price range. I talked about the upper 25% of this. If you go back to these calls, well, I talked about this in my private group because we were live. But once we got above it, right, we've treated it as a balanced price range. We've treated this gap in here as support, and it's basically rejected, right? It swept liquidity there and then immediately got back above it, closing above it. And then the next candle then led to this change in state of delivery again. And so the delivery is now changed back to bullishness. Because it's been super bullish, I wouldn't be surprised if they try to punish or go against them, at least in the short term. Again, we're not going to pick tops. I'd prefer to see it come down a little bit. Otherwise, it's just on a rampage to the buy side. And we'll just have to figure out a way to look at this near-term liquidity, right? We got a large wick here, so that's why this respected that wick in there. This green line right here is also the daily bullish order block, okay? I can find where the damn line's at. So the daily bullish order block, we're trading above. On Tuesday, not even on Sunday. Yesterday, or just while this was unfolding, I talked about this in my private group when I was live. Yeah, I think it was yesterday. It definitely was yesterday. And this liquidity ended up getting targeted. It, of course, went against it. So, you know, it wasn't ready. Once it broke the 50%, once it got above this regular trading hours gap, that was a really, really good indication. The price was then going to try to attempt to take this, because this is low resistance liquidity. In comparison to the things that are down here, trading into a consolidation, you can expect that it's high resistance. So this trading into this consolidation, this retracement, this opposing PD array to the uptrend, which is also, again, a balanced price range, it's going to be high resistance to try to get into that. We also have this low here that was swept. So when you have a lower low that price is trading into, it's a high resistance signature that ICT teaches. So it's more probable for low resistance to be offered to the buy side in this case than it is for low resistance to be offered to the sell side. First of all, because it's in line with the narrative going higher. And then second of all, right, trading into this is opposed to the overall order flow, the parent order flow, right? So yeah, with that being said, we have this fair value gap. So we will make sure that we monitor that. Again, this high here to that low in itself, I mean, you could see what it did, right? It acted as a BPR because it was just a continuation, right? They consolidated, manipulated, distributed, rebalanced. So now they should redistribute. Again, this is all happening pre-market open though. So it's kind of suspicious, especially when there's news at 7 a.m. We don't necessarily like to see things just start to rapidly take off in Asia or London leading into New York session, because many times that could lead you to a harder to trade or a sloppier AM session. And if that is the case, if that's what we end up identifying, we're going to have to consider waiting for PM session. Okay. So, yeah. And again, we want to always stock low resistance because it's unfinished business. It's liquidity that hasn't been satisfied, right? So your ability to spot low resistance signatures and price versus high resistance tells you kind of how you should navigate. Should you lower your risk? Should you expect it to be a slow grind or a fast, rapid move through the liquidity? Those are all anticipatable characteristics if you know what you're talking about and you've studied and understand high resistance and low resistance, which is why we talk about it so much. But yeah, and again, I can teach you all the different characteristics, all the different things, but it's an experience-based thing. If you don't have experience identifying the signatures, it makes it hard for you to really get in front of it and then understand like what's going to actually happen and to trust it on top of everything else, which is the most important. Right. And trading in high resistance, like consolidation, trading into an opposing PD array to the higher time frame trend, trading into a level that already took stops, right? Like this here, if it was going to go lower, if it was to trade into this, it would be high resistance. Why? Simply because there's a failure swing, or there's a stop run, not a failure swing. If it was a failure swing and we ended up getting displacement towards it, you can expect that they're going to blow that thing out of the water pretty aggressively. And again, you want to get you want to get a lot of experience back testing this stuff as well. So yeah, so we got 15 minutes. Good morning, Fritz. So yeah, hopefully that makes sense. It's very, very important stuff. Most people don't understand high resistance or low resistance. They don't know how to really navigate it. And they think that every single moment in price is a moment that you should keep your risk like at a normal level. And that's just not the case. I mean, you can if you want, right? We're all adults. You could do whatever you want. But, I'm sure that when you do back testing or, see me talk about high resistance or low resistance and you see the characteristics that price offers in both environments, you will quickly decide that, it's probably best to really dig in to where low resistance liquidity is at so you could take advantage of it. Because would you rather be in a move that rips towards a target or in a move that goes very slow, very lethargic? It gets there. You're right on the narrative, but it's slow and it makes you have more patience than normal. You know what I mean? And Eddie, it's because simply liquidity has not been engaged yet for low resistance. That's why it's fast. And liquidity that has been engaged, it's already been satisfied, right? So it doesn't have to be in a hurry to get there, or it struggles to get there, even if it still may go there, right? It takes a little bit of time to get there. It's harder to get there. And again, I didn't make it up, obviously. I just go off what I've studied and what I've learned. And that's what ICT has taught. And, he clearly knows. So no reason to argue with it. So hopefully that makes sense. Let me see. So yeah, currently we have this run on stops here. Again, that is a stop run. This is a balanced price range. So if price is going to trade into that, the expectation is we could see high resistance if it does choose to try to reverse and set a high, for example, and then start to turn around. Right. This is also a bullish order block. So there's many reasons just in this image here to be used to identify this as a high resistance level in price, right? It's consolidation on top of that, right? It's a little range. did obviously, retrace to go higher, but we have retracement, we have expansion. I wouldn't be surprised if we get a little bit of consolidation up here, because when you hit a higher time frame level, many times, price will like to accumulate. You know what I mean? Good morning, Jen. Seems like everybody's trying to hit me up today. Like 17 unread messages. What is going on? Okay. So yeah, hopefully everything I talked about so far makes sense. Again, we do have some discrepancies in price here. We are in May. As you guys know, well, hopefully you should know, those of you that have been with me for over a year, we've talked about seasonality. In May, there's a slogan ICT references, sell in May, go away, right? And it's very interesting when you go do back testing on these different months, when you observe the chart that I give you guys and the chart that I talk about with seasonality, just the topic of seasonality, and you take your observations and you look at the last 10 years of data, you'll be very surprised. And then when price doesn't have like a real overall bearish undertone, and there's a bearish seasonal influence, it kind of tells you a time where retracements may happen, right? Like this may be all the month of May offers in terms of bearishness, right? I don't really understand why there's so much stuff that could cause bearishness. This is clearly very artificial, right? There's lots of money printing that's causing this. So, we'll see what happens, but we're not going to fight it, right? It's going higher, so we're going to continue to go higher. And again, unless this height of that low is violated, that would pique my interest in the bearish seasonal influence. You could see that the Dow has had a very dramatic impact going into the month of May, right? So starting literally on the 1st of May, price rapidly declined. Mind you, we have the open of the month too. Go back and find that real quick. 1st of May. So the things that we've just talked about, again, hopefully they make sense. And again, every single day, every time you look at the chart, you got to think of power 3. Where are we at? Where have we came from, essentially, and what has formed from the lens of power 3? If you're not focused on that, you're absolutely tripping, okay? Because power 3 is the market. It's just the way that it is. You can fight it all you want, but that's just the way it is. And I mean, it's proven every day. You can find evidence of this literally every single day of the week. Every session, you look at every hourly candle, there's power 3. Every daily candle, every weekly, monthly, quarterly, yearly, 6-month, 3-month, 8-month. Doesn't matter what time frame you're on. If it has a candlestick, it's going to utilize power 3. Okay? And it's just the way that it is. Okay? So again, this is our monthly open. We have, since the start of May, at least for the Nasdaq, rallied up, right? We haven't even touched below, right? We did touch below here, right? It's opened and then sent it lower a little bit, tagging this order block. This is also a balanced price range. Prices came back into it, respected it as such, and delivered aggressively away from it. And now that we're breaching the high up here, again, there's a bullish order block up there. So, and in terms of power 3, wherever the open price is at, let's go find that real quick. So the daily open price is here. So we've done a lot of work above the open price. Again, we have a bearish seasonal influence. So if it starts to show us signs that price does want to go lower, by basically us seeing price break back down below this open price and aggressively reprice from this high to that low's 50% level, say we get below the new week opening gap, that would set the stage for us to potentially see this trigger in some type of negative, well, not negative, but bearish response. But until that happens, we will continue to reach for all-time highs, right? Because that's just the protocol when we're looking at things at all-time highs. Because everybody and their mama is trying to pick a top, especially with all the stuff happening right now. You know, in all honesty, I don't think that we should be just rapidly racing to the buy side. There's really no reason for it. And again, the main reason, at least in my opinion, and from what I've been hearing in the professional financial space, it's a lot about quantitative easing. Once you hear that word, quantitative easing, that is economic stimulation, artificially, by printing more money into the system. So, and that's positive, right? Interest rates, if they get cut as well, which is what I think the market's anticipating, because the new Fed chair that's coming is going to be very friendly with the interest rates, right? So yeah, we'll see what happens. We shall see what happens. So we got retracement. Again, I'll continue to look for buy side delivery. So I want to see if we can find something setting up. What the hell is moving over there? I want to see if we can find things setting up from like a 15-minute perspective, a 15-minute PD array. Like if we could break down below this and use that as a bearish breaker potentially. If it does want to go lower, that would be something reasonable. If we can trade back into this high here, maybe accumulate and then get another change in state of delivery while we set these equal highs, I wouldn't be too hesitant to try to engage something like that. If I drop down from the 15 to the 1 minute when price achieves these levels, and then we get like a change in state, you know, that would trigger me to want to go down to that lower time frame, use that framework, and then try to spot the execution inside of like a macro, close to a macro, preferably closer to the news event, because the PMI news event is not something to be played with. Like that thing is just as volatile as any other extreme news event, right? PMI is vicious, right? If you do back testing on it, like you'll probably see it today, you know, it's probably going to be extremely vicious, especially because euphoria is at all-time highs right now, literally. So yeah, we'll see what happens. If we take this to the weekly chart, again, we've seen that this is pretty consolidated. It's very obvious that it looks like they want to come down here. You guys know that the bonds, if we do end up going lower, right, if price does end up smashing to the downside in the bonds, that is going to be shown in a positive effect for the dollar, essentially. And then, of course, that should have a negative impact on the indices. Wait, did I just say that right? Yeah, if the bonds go lower, it'll have a negative downside impact on the indices and foreign currencies and a more positive bullish impact on the dollar. So it's just something that we'll monitor. Obviously, there's a cracking correlation going on here. Seems that we're respecting this fair value gap. We're about to go into the open, so we'll see what the reaction is. I'm not willing to take trades close to the open here. You know, and if it rips, so be it. You know, I have rules that I need to follow, and I will not be breaking those rules. So yeah, we do got retracement, right? If this is going to go higher, it should respect this high to that low. It's also nested inside this daily bullish order block. Okay, let's actually remove that real quick. We got the daily wick here. See on this daily perspective, right? We got that wick. So it's going to have to stay above the midpoint of that, right? Not only that, we have the retracement in here, and price ran up above it. So if you guys remember the deferred liquidity logic that I talked about the other day, you guys can see it here, right? This is a run above the high up there, okay? So that creates a high resistance signature. So when price returns into that, right? When it tags it, it's not just going to fly through it most of the time. It's going to have a low that gets set, purge that low, then rapidly run, because then this creates a failure swing here once it retraces. And then that becomes low resistance, engineers low resistance when previously it was high resistance. So this is a very advanced expectation that, you know, don't take my word for it. Go in there and study it, right? Any of the things that we've talked about that's high resistance, you're going to want to observe this characteristic. You know, almost always, it'll have a stop run first. It'll retrace first when it trades into that level before you're offered low resistance. It's a pretty shallow retracement there, but nonetheless. So yeah, it looks like we're just going to be on a tear, at least for the moment. So we will be kicking back, waiting. I wouldn't be surprised if they come down, try to wipe this out a little bit. I'd prefer to see a stop run like that. All right, so we've engaged the buy side. Again, we're coming off fast London. So we're not going to be too antsy to get into a trade. Trust and believe that. So let's see the response off this. Again, I wouldn't be surprised if it breaks down. If this gets below the 50% from this low to that high, we may be able to map this out as a small market maker sell model. Unless it, of course, just smashes through, right? But unless something like that happens, I will not be short. I will not be expecting short positions. We just had this stop run here. Basically double stop run. So let's see what the first 30 minutes can show us. See what type of data we can gather from that. Let me see. So yeah, we'll see what happens. You guys have any questions? So we got that regular trading hours gap in there. So 50% of that regular trading hours gap, that's always your first objective per ICT's advice, right? The first idea that you want to see, if it's possible, right? You want to first and foremost see if we can reach towards the gap. We've opened up at a massive premium, right? This new week opening, this regular trading hours gap is massive. It's huge. But if it can't even attempt to get down there, it's freaking 230 points. It's pretty massive. But if it can't even attempt to get down there, obviously it's exceedingly bullish, right? So it looks like that's the case, at least for now. But again, I'm going to wait for that first 30 minutes to unfold. Let's see what happens. Let's see what it can offer us. Again, I'm not in no rush. So we had SMT here. So there was SMT. So that supports this move continuing. But if you would have taken an execution here, either short or bullish, like so early, this is why you wait, right? We do have a stop run there, SMT, so I'd watch this real quick. See what the response is off of that. We do have equal lows down here now. pretty sensitive to this daily bullish order block. It's to be expected though, right? So that's a good response there. This is a bullish order block. It's also a high, low, higher, high, bullish breaker. But again, the timing element, we're too close to the open for me. But if this was in a macro, right, like 650, this would be something that I'd be like pretty solidly considering, especially with the SMT. But again, fast London prompts me to absolutely be a whole lot more picky, a lot more patient, more dependent on the macros. You know, we're always pretty focused on the macro times, right? It's part of the high probability framework because that's when price is algorithmically programmed to spool towards liquidity. And whether you believe there's an algorithm or not, believe that there's a macro that's operating or not, the evidence is undeniable when you backtest. Because why almost every single time in those times does price run towards particular liquidity that you may or may not see ahead of time? Why does it choose to run at those times? It doesn't happen every time because nothing's 100%, but most of the time is all you're looking for. Like I said, watching this would have been a worthy study. We do have SMT, like we talked about earlier. But again, we don't pick tops. We have Kraken correlation, so we're in low probability conditions right now. All the more reason to be sitting on our hands and waiting. You know, the bullishness has not been turned off. We have lots of liquidity over here, right? Buy side here. Notice that that's a failure swing. So how is price delivering into that? Pretty quickly, right? Pretty quickly. So relative to this high and that low, 50% is right in there. We do have this high to that low. That is a bullish breaker on the S&P. And for whatever reason, this thing is ripping mid-war and all. like those are like the main announcements. The new Fed chair and the fact that the US and Iran are in active conflict right now. We see that Kraken correlation. This is not trustworthy. It's not something that I'm going to be willing to chase. But obviously the move that I just pointed out there, if that was something you were comfortable with, right? It did offer the characteristics that we said it, could potentially provide. Right, the bullish breaker. The only issue with this was the timing for me. I don't take trades right at 6:30. It's just the way that it is. Doesn't mean you have to have that rule, but for my trading, that's what I've chosen to do, and it's got me good results. So I choose to stick with it. Again, you don't have to do every single rule that I employ, right? You could be more aggressive. You could be less aggressive, right? You can use certain stuff and not use certain stuff. It's all dependent on you as a trader. I don't force you into a mold. Just like ICT says, nobody that teaches his concepts should force a student into a mold. I have multiple different molds, right? I have multiple different models. But at the same time, some of them are probably not going to work with you, right? Some of you may be more aggressive. Some of you may be less aggressive. Some of you may be have less of a risk tolerance, right? You may want to catch trades that have more confirmation, right? Some of you will be cool with just taking things with less confirmation, right? But it solely depends on you, So whether you decided to engage this as a move or not, obviously it's up to you. But I'm very curious to see, especially with the Dow declining so aggressively, if that's what's going to happen. What the hell is? There it is. Especially with the Dow, if this is going to continue, right? We do have bearish SMT on the higher time frame perspective. So I would not be very surprised if they jam this up and then try to pull it down aggressively, right? I would not be surprised. But again, we don't pick tops. What would trigger my interest to want to go look at a short? Well, if we can get price to smash aggressively with displacement, violating this move that just pushed up and took liquidity, that may set the stage for us to then try to attempt to take these equal lows out, right? But unless that happens, I will keep looking to see further support. The price is going to go up. We do have an order block here with a displacement, right? Violating that. So if this was, under the underpinning was feeling bearish, right? If we had a bearish overall perspective and this was a higher time frame PD array, which it kind of is, right? We're breaking through the upper portion, but the bias is bullish overall. But this little piece of price delivery here, this little signature, it's an order block that has the next candle that completely blasts through the low, closing below that low of the wick. A lot of times when price returns into that, if it's bearish, which we're not right now, so I'm not saying this is something to study as an entry, but this little piece of price delivery, when you trade into liquidity and you're bearish, and you have like a PD array that it could respond from, and the timing is correct, this is also a different PD array, right? It's a momentum order block. So look, midpoint should be respected. We should not take out this rejection block if it's going to keep going lower, right? This is a rejection block, a relatively equal bodies. But if it violates this, again, the order flow is telling you that it's not willing to hold that. So are you bearish? No, you're bullish. So you look at this order block. And so once it gets above this on a closing basis, when it comes down into it, it should not revisit the 50%. This is also a rejection block, right? A little bit of a discrepancy because, for whatever reason. But nonetheless, the off put or offset delivery in here doesn't take away from the fact that these are what they are, right? We've got rejection blocks down here too, right? Those of you in my private group, you guys see this here. Hopefully you understand what model that is as well. Aside from the breaker, right? We have one of the flagship models I teach in my private group right here. But again, the timing is everything. If the timing's not correct, I do not take a trade. I don't care who's doing what, who says what, any opinion. I don't give a shit. Okay. I have been able to find consistency with certain behavior, and I will not deviate from that. So we are getting a really rapid run higher. Again, I'm not willing to chase this. I did lay out perspectives that can allow you to have participated in this move. I pointed out the breaker here, and I just pointed out this order block here. Those two areas in price offered you a move, right? Nobody is bearish. I've not said one time that we're bearish. I've said it's all bullish, right? And before these moves really matured, right? This one here too, right, being the order block with the failed bearish one that I was showing you an example of. These both offered a move, right? Let's see, is that a worth? This one's not really too worthwhile, at least up to this point. But this one absolutely offered 20 to 30 points. Yeah. So hopefully this stuff makes sense. And say you were in a trade down here, right, for whatever reason, and price is breaking through some of these levels. Again, you're watching the wicks, right? You're watching the relationship the price has to each individual candle, right? As it's closing, as it's printing into stuff, as it's failing to break through certain levels, the time that certain stuff is happening, right? I can say that if this high ends up below the 50% of this range in here, let's use that low. If price does break down and we close below the 50%, these equal lows are too clean for me. So that would be my trigger to then try to seek second stage distribution on a reversal. Maybe it's short term, maybe it's just to get down to here, and then it decides to kick back up from this daily bullish order block, right? Just give one more accumulation of stops down in that higher time frame PD array, right? It could very well happen. But this is my cutoff. We have a high, low, higher high. This is also not only an order block on that other time frame, But on this time frame, it's actually a bullish breaker. Right? You have a swing low, stop run, displacement, return back into it. So you could look at this pretty much as accumulation, manipulation below the low here, distribution, rebalance is what we should be engaged in. So we should get redistribution. I'm getting so many messages right now. It's so distracting. It's just nonstop. Like, holy crap. Relax. So yeah, price should not disrespect this delivery in here if it's going to continue to go higher. And there's that redelivery, just as outlined. What's up, Carlos? Appreciate you hopping on, bro. So again, up to this point, there's been the ability to be profitable, right? We're now getting into a time that I'm now willing to stock an execution, which is inside the macro. And price is just continuing to rage, right? It's continuing to just absolutely rip to the buy side. So we do have this nasty cracking correlation. Ugh. You could see that this liquidity is definitely what price wanted to reach for. We're getting outside the new week opening gap in here. Yeah, the fast London is leading also to now, at least from what we see so far, fast New York session. So whatever is happening on the back end is absolutely pushing price so aggressively. Our price is refusing to really give much of a retracement, which I'd prefer to see us retrace a little bit, right? Like I would have, in this instance, right, before it got through this high up here, I would have preferred to see it break down a little bit, try to take this low out, right? It already took this one out, but trading down into this level again, just to accumulate a little more, then presenting us with one of our 5 models. I think, the breaker's delivering very nicely today. We have my wick model that I teach in my private group that I pointed out earlier. But yeah, you go in, if you have multiple models, you go in looking for one model. And then whatever price is showing you, because every model has its strengths and weaknesses, you then decide which one you're going to use, right? Like today, the breaker's working out flawlessly, right? So if you trade the breaker, right, something you could be looking at. If you trade order blocks, right, the order block, after, price kind of faked out to the downside right at the open and then change state of delivery, you could simply look for those executions too after stop runs. Again, this is too aggressive, right, for the start of the session. I would have preferred to see them do this later after sweeping these lows, but instead they left equal lows. The situation here is an SMT down there. So that is definitely something that was a cause for this reversal, especially because we're at all-time highs. We have not been bearish at all. It's just continued to be bullish. And again, this is a perfect example of what I talked about earlier. You don't pick tops, like at all, because if you did, you would get beat up when you can just simply go with the trend until things start to kick in the other way, like market maker sell model frameworks, right? Like if this breaks down below the 50% up here, right, from this high, say it breaks down below 50%, you have accumulation on the left side to watch it as inverted balanced price ranges. And if it respects those, say it breaks down, retraces into this range, and it can't break outside this this level once it takes out the low, and we close below the 50%, again, we have relative equal lows here. It's a very obvious target, right, for them to want to come and try to purge out. But again, that's the only scenario I would be looking for shorts, right? The only thing that would lead me to looking for shorts. In this instance, we're just going to continue to see order blocks holding, right? Fair value gaps holding. Everything order flow wise is supporting bullishness. It is pretty exaggerated at this moment. So getting into a trade up here, we're at a massive premium. So you don't want to buy high, you want to buy low and sell high, Okay. That doesn't mean that every high that forms you look to short, right? There has to be a context, a reason why. And preferably that reason should come from the 15-minute and above. At least that's how you make the lower time frame executions more viable, more consistent, is by doing or having that type of perspective. So we got this 4-hour open here. We've had a bullish power 3 from the current 4-hour overall delivery. You could see accumulation, manipulation, distribution, rebalance, redelivery. Okay. We got accumulation in here. You know, small manipulation. We have one more manipulation. Price bounced away from that. Right once it got above it, it came back down, then bounced away. If we take this high here to that low, well, actually we go, all right, we get fair value in there. It was very, very shallow. It wasn't really much manipulation at all, really. It did sweep these out. But again, if you just take the range there, you get the midpoint, which is fair value. You could see that this candle here respected that fairly reasonably. On a closing basis, it absolutely respected it. We have refused to get to that regular trading hours gap. So, you know, the more that this continues to rage higher, the less likely it is that it's even going to refer to that. But who knows, right? With the Kraken correlation, right? If that continues, which, you know, we may snap back in line. But if the Kraken correlation continues, you know, price may continue to just do whatever it wants. There's a massive imbalance down there, though. So if we go to the regular trading hours, huge inefficient price delivery. So at some point, they're going to want to come back down into that, right? It just like gapped through the high resistance right there, right? In the electronic trading hours, it was a slow grind, some little jolts of fast-paced movement, but nonetheless. You know, and then we got above this bullish order block. You could see clearly that that bullish order block level was beautifully respected here, right? It couldn't even really come back to it here. I think it did tap it a little bit. No, it didn't even tap it at all. We have this wick, retracement, displacement, balanced price range from this wick, this high to the low. So that encapsulates a portion of this fair value gap. So that's why it left it open. That's why it didn't want to come back down into that. And that right there is, for those that may not know, a reason why fair value gaps get left open, which no one talks about. So there's a reason why it didn't come all the way down into that. So yeah. So yeah, price is just absolutely on a rampage. There's really nothing framework-wise for me to really want to engage here. We're very rapidly at a premium and we have cracks in correlation. So this is a time when my rules state do not engage. I've called 3 potential opportunities this morning, so it doesn't mean you can't engage or find something to do. But at the same time, you know, you don't want to put yourself in needless risk. And it's outside, this is outside my rules, right? You know, so we're a little bit more inside the rules given the time. But again, the Kraken correlation, I'd rather just sit on the sidelines and not put myself at risk of a deep retracement because it could happen, right? It could come all the way down into there. We don't know how far this is going to go either. So it could just rip another 500 points. But, you know, this is how I trade, right? This is what I do. And, you know, just because I want to take a trade, just because you want to take a trade, you know, doesn't mean that in every condition you should push. And just because it's going higher, you should get in. Or just because it's going lower, you should get in. There's rules that you have to follow. And it's really dependent also on how aggressive you are as a trader. And only you can decide that. And again, I pointed out this move perfectly worked out. That was the best move, right? minus the fact that the timing element was not in alignment with what I want. Plus the Kraken correlation goes against my ability to trust that this is going to keep going higher aggressively like this with no combative behavior. The secondary idea was this order block, which is also a stop run, break above the high. That's a breaker. I pointed that out. Beautifully worked out. So the two ideas that I've shared presented buy-side delivery. We may see this turn into a market maker sell model, like I said. So now we're breaking down below this, right? So I'm going to just assume the price is potentially going to violate this. If it violates this on a rapid basis, the return back into that may cause a rejection, right? If it does that, then me stalking this as a potential sell model would then be in play. I'm not going to assume just because it broke down below this that, okay, it's going to go lower now, right? I need to wait. It's been so bullish. We're super overextended. There's a massive Kraken correlation. Price is kind of doing whatever it wants across the board, right? They are somewhat getting back in line with correlation here. We do have higher time frame bearish SMT. There's a lot of stuff going on in the world right now, right? We do have this trend line liquidity, which would be my potential target if we can get this to break down below this low here. This right here is potentially a change in state of delivery, so watch that. Whoops. See if we want to paste that. So let's see how this behaves. If this is going to go lower, it shouldn't come back to the midpoint. This right here would also be classified as a second change in state. We have 1 and then 2. Because this is actually inside, well, yeah, I guess it is kind of inside that. If this order block gets inside the open price here, right? If this runs up here, closes, and then breaks down below this, that's a propulsion block, right? Remember what I said too earlier. We have this big candle, right? This potential bearish order block with displacement that rapidly encapsulates that order block's range. So if it's bearish, the characteristic we should see with this signature, what we should see is that it shouldn't come back to the midpoint or disrespect this rejection block. And if it does, right, say it just gives it up aggressively, then price is going to keep going higher. But these are things that you want to weigh out. We're inside of a time element that could also be a little bit favorable if we can see this get respected in here. Let's go back to the 1-minute chart. We've got a rejection block forming in there. We'll take this low to that high. That's also a bearish breaker. So if we map this out, right, bearish breaker there. So if this once this closes up here, that's a problem. Then this idea, right, you got to refresh the idea and then wait for more information. Once we get above this high, if it can return back down into it, this is also a continued bullish breaker for this 1 minute. And assuming that the other assets keep going higher, we would then look to continue to see this rage. At the same time, this Kraken correlation, again, has me sitting on the sideline waiting. I'm not willing to engage this right now. I've already called out 2 setups that did work out. Hopefully you were able to participate in those if you did feel inclined to do so. Again, I'm not a financial advisor. This ain't financial advice. I don't encourage you to take any of the trades that I share, no matter how good they may seem. You have to make those decisions on your own. You want to be independent. You don't want to depend on me. I'm here to help you. I'm here to teach you so then you could do it on your own. But just disclaimer, right? Required disclaimer. So we have this down close candle here. So if we get back above that, again, the idea to go short is off the table. The only way that I would want to go short or even consider it is if we start to break this. But I really want to go short if price gets down below here, depending on how this would be treated. But yeah, watch the body closures in here. If it can't close below the midpoint there, we may see another leg to the buy side. And once it gets up above this high, again, it's a bullish breaker, and we may see continued run. We are going into the silver bullet time window. We're going to have a new 4-hour candle. This previous candle's been aggressive. If you think about it, a lot of times when you have a displacement, what does the next candle generally do on any time frame? Many times it looks to retrace into that previous candle's range. So we may actually see that unfold here. Stop run. We have a fair value gap, a shift in market structure. Now we're getting this order block being traded through. So we are respecting the midpoint from this low to that high. So watch when price returns back into this, if we can get that, right? Because this candle may be an early change in state of delivery. We have a stutter. And then we got that breakdown below this up candle. That's a nice rejection there. So yeah, now that we're below this, any return back into this, it's going to have to hold that level if we're going to trust that this is going to, in fact, go lower. Again, I will be fully interested when we can get down below here, because then that'll trigger in my interest for the sell model. And if it gets down there, tags that, and then just rapidly turns around again, that's a failed market maker sell model, right? And that promotes continued buy side. But we do have 1, 2, 3 drives. So it may look to hold inside this, right? Nothing is bearish yet. It's just showing early signs that that may be the case. New open price has now been printed here for the 4-hour. Okay, so we got that stop run. Now price is continuing to rage. Again, we have that news event that just came out. So it looks like they're going to hold in here and continue. Yeah, how far can it go, right? We're in explore mode. So it can go as much as it wants. It can go 1,000 points from here. And there's really nothing to refer to in terms of targeting on the left, except, new highs that get created. We do see the dollar. It's kind of a shit show. We did have this failure swing in here. Prices reached for it. Still got this low down there. Got this failure swing down here. But dollar is absolutely a mess right now. Dollar is a mess. Okay, you notice how it's having a hard time getting through that midpoint right there? Let me actually move this to the side a little bit. So yeah, now we got respect to this. We have this order block that takes the low. We have a candle that displaces and closes above, and now we're respecting that, right? So, these are some early signs that price may look to continue. We're inside of accumulation here. We've had displacement. Now we're in a mode of accumulation. We're at the new 4-hour open. So this is something you want to look at here too. Right, depending on how price treats this level, we need to see some more active movement in here. Otherwise, we risk, because fast London, now fast first 30 minutes of the range, we're leading now into consolidation. So expansion, consolidation, right? We may get retracement. and then we may get expansion again. Or if it's just going to keep being bullish, right, it'll just fly from this level, right? Staying up above this, right, price should continue to go higher if it stays above this order block here. 1, 2, 3 drives pattern. That's a reversal pattern. My only gripe with this is we've been so aggressive to the buy side. We don't want to pick tops, right? But we also don't want to get in just because it's going higher, right? And get into a buy just because. This could be a reason here to justify. We do got that change in state, right? We do have the order block with the overtaking of the whole previous candle, closing outside of it. It is respecting that, right? Now we got another order block. So if it's going to keep going higher, these are things that need to hold, right? We have the wick in here was respected, which led to this displacement. So again, we just got to be patient, right? Just got to be patient. Don't be in a rush. I know everybody wants to pass their funded accounts and do this and do that, but the worst thing you could do is be in a rush. People don't like to hear that because, they're signal junkies and they're like drug addicts, expecting me to be their drug dealer. But this is the reality of trading. You don't want to be a machine gun. You want to be a very, very lethal sniper, knowing exactly what you're looking for, right? Avoiding times when you could be hurt, right? And then knowing times when you should pounce, right? And go ahead and pull the trigger, right? You don't get that understanding by executing anything and everything, right? Or just because it's going higher or just because it's going lower, you take a buy or a short. You want to see liquidity give you a reason, right? You want to see liquidity engaged. You want to see signatures and price supporting whatever it is that you're trying to see. Right now, it's not fully given up the bullish idea in here. Right, we took 1 liquidity, 2, 3 liquidity, right? So 3 stop runs that have now led to displacement, change in state. We had this one, right, that could have continued to be a change in state to the downside to reach for equilibrium in here. But I think we could take that off now. We're breaching the midpoint of the breaker, so that kind of takes it off the table for me to really consider, unless this is as far as it goes and it displaces through this low. In that case, we would then use this wick when price retraces into it. That would then be supported to try to target the sell side. But in this instance, order blocks being respected, order block, order block. So as long as this keeps continuing with this perspective here, right, in this delivery, we may see price continue to keep going to the buy side. Again, what is everybody thinking right now? Think about it, right? What is everyone obviously thinking? Oh, it's going higher, right? I'm going to get into buys. Let me just chase it. So knowing that that's the case, prices now had a delayed pause, right? So it kept going, and then delayed pause, right? It didn't do it right away like, it does many times. It waited for the news event, right? So it kept going, news came out, and there's nothing happening. So it seems like they priced in the news before the news came in, got everybody excited, max euphoria, and now price is kind of being held in here. Think about it. If you're in this, when you execute a trade off the heels of this, what's your expectation mentally? Oh, well, I'm expecting that it should keep going. It should just keep flying, right? There's no possibility that it could slow down. And what does the market do? Naturally, forces what you don't want it to do to happen, right? It pauses. It may look to continue, right? Nothing in here is totally justified a short yet, right? It's all continued slow gravitation to the upside. Now we got the Dow snapping back in line. So the correlation is now intact, right? So now we're in a symmetrical market here. So again, if there's a reason to buy, it may be something that is fruitful. We have a high, low, Let's actually adjust this here. That's a bullish breaker there. And again, unless it breaks down and inverts this or just disrespects from this low to that high's midpoint, or from this low to that high, right? That's the breaker. That midpoint there, if it breaks through that, then again, this becomes a candidate once more. But things have shown early signs that it may look to go ahead and do that. It may come down and target these contingency lower levels that we had, aside from the buy side. But it's now supporting continued buy side here, right? Nothing is telling us that we should look to take a short, right? It's supporting this down movement, up movement. If this is a true bullish breaker, all of this should be a balanced price range. We should never even come close to the midpoint. This is why I love the breaker. It's my favorite. Right? I've called out 3 breakers today. This was a breaker here. This was a breaker here. This almost became a bearish breaker, but it obviously failed. Faked out once more, creating 3 drives pattern in a bullish trend, and then now it transferred to a bullish breaker, right? High, low, higher, high. So 4 breakers in it. This is why you only need 1 model. You see how many opportunities and pieces of framework inside the continued buy side delivery? You see how much has happened? This is all within a couple hours. It's not always like this, obviously. There's not always like 5 different like variations of your model. The breaker is one of the most common though, right? So yeah, we'll see what happens with this. That's not what we like. But you could see how it's everywhere, right? You're not going to want to engage every single one. You want to engage the one that has the most higher time frame confluence, right? The most intermarket relationship agreements, and the one that's in the proper time, right? Like this breaker is inside the macro, right? So was this bearish idea, right? But obviously it kind of gave it up. Again, from that 5-minute chart, was it the 5-minute that had? Was it the 5-minute? No, it wasn't the 5-minute. It's the 4-minute that had that little area there. Right, you notice that rejection block up here still hasn't been fully met. We've tagged it just now, and now we're getting rejection. So that may be an early sign. We're in consolidation, right? And an early sign for price to want to go lower. This is a stop run, so it may be slow and lethargic to get down there, if it wants to get down there. Got this wick in here. So all these observations that I've been just laying on top of things right now, these are all things that go through my head when I'm trying to decide on what I should do, right? Power 3, right? We've basically left Power 3. Once the open price came in, right? That open price, because we're so far from the London Open, right? Or the daily open price level, we have to use the 6:30 time, the 5:30 and 6:30 time, AM Pacific Standard Time. Those are our ideas for open price navigation, right? You can also use the 4-hour open, right? That's another pretty powerful tool. We see that there's a pretty large wick here that happened on that 1 hour. I'd say that if this candle here closes below that wick midpoint, say it comes up here, respects it, and then we displace breaking market structure, shift in market structure, we're potentially going to set up a fractal in here, right? We have a lower high to the left, lower high to the right. So if we get that rejection from this level and then price breaks down through this, this becomes something that is put in jeopardy. It becomes a potential target. But none of this has upset the bullish trend yet. These are just some things to observe. If we do get above this high here, that would definitely be something to, oh, sheesh. What a rapid move right there, huh? So yeah, that rejection block up here was the root cause of this, right? We're right to the rejection block. Now we get a breakdown here. So that bullish breaker has now been fully sliced, right? I mean, look at the condition now. From fast to back and forth, looking to try to reach for sell side potentially. Again, this is the risk at all-time highs, right? You can't have a super accurate determination of how far it's going to go, but you can determine when it's going to retrace, right? But you just have to factor in some of these things, right? I pointed out the midpoint of that wick. Isn't it ironic? It went right to it and then rejected from it. We got this wick in here. So again, that market maker sell model is definitely something to be considered here. This wick needs to be respected if it's going to keep going lower. Dollar just had a rapid move there. Let's see if we can't get this to go and punish the crap out of these people that are to the sell side here. Let's see how exciting this can be. So yeah, now we're triggering in the market maker sell model idea. So we got the equal lows here. This is AM session low. Yeah, it's going to have to respect this low here. We shouldn't even attempt to get up to this low. Right? If it comes up, preferably if it's going to be very trustworthy to be bearish, that low should be highly respected. It should be very sensitive, right? It came right to it. Oh, we got low, high, lower, low. It should act as a bearish breaker. This should be a balanced price range up here. And if it was to do a deep retracement in there, again, there's really not much to be super excited about. You don't chase the move like this. So let's see, watch the wicks in here as price is printing. If it's bearish and trustworthy, it should respect this wick. It's already came back to this low. It should be sensitive and continue to rage lower. If it starts to break to the buy side, then it's probably not done going to the buy side. But we just came down, purged this liquidity. We don't want to see it tag this real quick and then just immediately turn aggressively. We want to see this wick here be respected as well. We do have a up candle, down close candle here that's now being overtaken, so we don't like that. So let's see what happens here. So we did just take out this early AM session low. So if price does want to displace aggressively, say it inverts this fair value gap, that would be the next potential idea. You can catch that as an inversion. So you got accumulation, manipulation for the 4-hour. And we may see distribution take place here to the buy side. Again, this is why you don't pick tops. So yeah, let's see if this is going to be trustworthy and continue the bullishness. It's going to have to not get back beyond this. It should really respect this and then just start to continue to rampage to the buy side. Okay, so now we got a very aggressive repricing. This is vicious. I mean, dude, holy crap. Holy crap. Yeah, I would have preferred to see it not come so deeply into this, but it did. So very, very rapid too. I don't really feel comfortable engaging something like this that looks like that. It's the second time it's done that today with this very aggressive, like 50-point delivery. We got SMT at those lows. It's not necessarily something you like. Got stop run up here. Price is rejecting. So yeah, it looks like the sell model is potentially still in play. Seems like it could still give us that behavior in here, get us to target the lows here. But I don't like how much rejection is happening in this level. It seems like they're accumulating stops down here, and we're higher time frame bullish. We didn't close through this aggressively, which is what would have really triggered my interest. Right now, it just seems like they are whipping back and forth. So yeah, trying to get a feel for what it seems like it wants to do. So now we're back in the middle of the range from this low to that high. Again, it could just be a retracement and then continue to reach for more all-time highs. We did leave equal highs up here. So again, that could be something that it wants to come back and target. It is a failure swing too, but everyone's trying to buy right now. So you got to keep in mind what the general psyche is at the moment. But the bias is bullish. So I'd say that if it gets above here, right, and inverts this fair value gap, like I said, that would be something, an area in price where you could then consider inversion and then see if it can't offer something even further to the buy side. Inside of this as a bullish power 3 from the 4-hour perspective. So very tricky. Yeah, because we're overall bullish, shorts are not low resistance. When you trade against the higher time frame order flow, you should automatically assume you're probably going to be faced with more high resistance delivery. Yeah, this thing is not willing to really be sensitive to anything going to the downside here. It's very reluctant to do either situation. See, I'm not willing to touch this at all. Been trying to consider something in here. It's been all over. This right here is something that I'm looking to try to consider, right? This inversion in here. It's also, low, high, failure swing. It's a mitigation block. Yeah, you see how fast it is? It's just like jerky, very, very jerky. It's got little jolts here and there, and then it goes against it, and then it just punches back the other way. So this is just something that's very, very risky. But this right here, this inversion, that could be something significant. We do have this high to that low. Price breaks above it. We shouldn't realistically even get below this level here. Yeah, if this can't deliver, right, if it doesn't give a move to the upside here, again, I will be more so on the sideline. I've already called 3 reasonable entries today. I didn't participate because it's just out of the time element that I wanted to see. But this in here, right? It's jerked lower, came to a discount basically. It's what it looks like from this low to that high. Seems like they just ran it to a discount, stopped these people out, stopped them out. Anyone that was in those early executions essentially got, unseated. What the fuck just happened? That was fucking weird. So yeah, this wick in here is going to have to be respected. Okay, so that's a beautiful move right there. So the inversion from that fair value gap that I talked about, it definitely did play out right there. Let's see how far that can go. So you can consider the fact that we've already taken stops too in here. So if we were to get a projection from this level, we got projections up there. Can it get up there? Sure. Will it? We're going to have to wait and see, honestly. We do see that the three indices are trying to go higher a little bit. We've just been so aggressive to the upside here from yesterday and this morning. I mean, you could just imagine what the sentiment is. Everybody's looking to try to get in. They think they're missing something. So they may look to punish that, especially because the last couple of weeks have been just absolutely incredibly bullish. So again, this high to that low should act as a BPR now. We should continue to see respect to this level. And if it comes down into that, it's going to be high resistance, like I talked about with you earlier. So low resistance this morning clearly has been to the buy side. Anything that's went to the downside has been pretty nasty, pretty slow, pretty lethargic. Yeah, this right here, this wick, right? Shouldn't really try to contest that too much. Go to the 15-minute chart. We do have a bullish order block there. We have this overall, overtaking of this 15-minute bullish order block. So price returning into that should be sensitive if it's going to keep going up. All right, we have hit standard deviation levels on that higher time frame, the larger projection. So let's see what happens. And now we're getting stop rate vibes. Price is pulling against it a little bit. It does seem to have basically offered a bullish power 3 for this start of the 4-hour candle. Again, we're so early in that 4-hour candle, right? But we've had a decline, rally up. We're inside this 2 standard deviation, which is definitely a risk of retracement. That standard deviation comes from down here. Was it that one or was it? I think it was this one right here. Where did I? Don't know why it's not there. Oh, there it is. Yep, from that low and that high. Projection up. So I'm a little bit off. It's right there. So that's a projection from this low here. So these are possibilities, right? It's never going to be like 100%. It's going to go here or there. But when you're at all-time highs, projections are your best friend. And 2.5 standard deviation, a lot of times when it reaches into those levels, can present you with a retracement. So that may be what we get here, you know. So we'll have to just wait and see what happens. But yeah, so today, just to recap, I personally pointed out this breaker here. Those of you in my private group probably saw the wick model down there as well. I pointed out this breaker here. So yeah, we'll see right here with this. I don't know if that standard deviation is going to mess with this and the ability for this to continue. But we'll see. It's definitely a risk that you got to consider, right? But I called this one here. We called this bullish breaker there. Called this bullish breaker here. I talked about this one, right? It didn't really, give it to us, right? I wasn't going to take that one either because I'm not picking tops. I just talked about this one. Obviously, that was kind of short-lived. And then I talked about this inversion for value gap, right? And this one, and this one were highly emphasized. This one, I needed to wait a little bit longer. This one in here, maybe an execution could have been taken, but it would have resulted in a loss. Was that even? I don't think that was even 20 points. Oh, yeah, it did. It offered 20 points there. 20 to 30 is all you look for. So maybe that was something that, given the condition, you'd be able to engage, given the condition that it's NFP week, right? So yeah, let's see what this wants to do here. Gotta look around my freaking camera. So yeah, lots of nastiness in here for the Dow. We don't want the S&P to fall. I don't like the closure like this below that low. It's definitely a red flag. If the S&P falls, it's going to bring the Nasdaq with it. So let's see what happens in this fair value gap here. But yeah, we called a reasonable amount of moves today. So we don't necessarily need to demand any other moves to show up. But from this 5-minute chart, we do have this small retracement that can happen unless everything shifts and we end up breaking down below that inversion level that I just pointed out. Right? If it violates, this gap in here, say it breaks down, then again, it could look to really, really amplify to the downside. We have a pretty nasty crack and correlation here. Pretty nasty crack and correlation. Closures below these highs. Again, I really don't like that. It's not a big time confidence boost type of signal. So let's see what she wants to do here. Got this wick. Pretty solid displacement that seems it's going to encapsulate that candle, right? We are respecting the wick here that I pointed out. So I wanted to watch how it respects that and map both these lines out. It's pretty solidly respecting it. And we got a bullish breaker here on this 5-minute chart. So yeah, been a pretty wild morning. Pretty wild morning. Hopefully you guys have been safe. Yeah, there's been an SMT with all the indices at the highs for the whole session, basically, Carlos. Like it's been at the highs because that higher time frame, right? Higher high on the Nasdaq, lower high in the Dow, lower high in the ES. So it's definitely a risk, that's for sure. Yeah, it's still holding up on the Nasdaq. Still holding up for those buys. We could see that the order block there traded through, price came down into it a little bit, couldn't even get to it. But this wick here, followed by displacement, we shouldn't even attempt to get down there. It shouldn't have a deep retracement if it's going to be a very reliable continued move. I don't like this rejection block. I don't like the stop run that's now leading to a fractal high. I don't like that, especially on the Dow and the Nasdaq, or the Dow and the S&P, because they're not at all-time highs, right? The Nasdaq is leading right now because I think tech is doing pretty reasonable. Think, if I'm not mistaken, there was some earnings. But again, it's NFP week. So unorthodox delivery is to be expected. I keep saying the same thing because you need to understand this. Like, you have to accept this. Because coming into NFP week thinking, let me just go take anything and everything, I mean, you're going to get hurt. And I'm not here to, blow smoke up your ass. People may not like that. They may want me to be jumping around with disco ball lights and a bunch of nonsense to keep their attention. But, you got to be focused on the right things. And trading every single day when conditions are like this, engaging anything and everything when conditions are like this, it's not going to be the best thing for you. You're going to lose money. You may make money, but you're going to lose constantly. And it's going to feel like you're spinning your wheels. You're never going to feel like you can get ahead. So, yeah, price is basically continuing to hold from that inversion. That inversion fair value gap idea that I shared, right? I said if it gets above that, returning back into that. Obviously, it didn't feel the necessity to get fully back into it because the sell side, buy side created a BPR, and it just simply used the mitigation block here, right? The low, high, failure swing, right? And then price just came down into that. It literally tagged that exact price point, and it tagged the exact open price of the 4-hour candle, right? So an execution from there, trying to take it up a little bit further to the buy side, it's offered 53 points exactly. All you look for is 20 to 30 points, especially on NFP week. NFP week is notorious for this type of delivery, right? Constant stop runs, very jerky price delivery. So you want to be able to survive NFP week. At least that's the first objective. And then you can look later on to be profitable when you know fully what's going on. You're not going to overtrade and over leverage. But coming into NFP week, right? It's NFP, right? ICT says not for professionals. Of course, when you know what you're doing, you can engage anything. But at the same time, do you really want to? No matter who you are, you're opening yourself up for more risk. You're opening yourself up for more choppy, jerky price delivery that you may not be able to anticipate. But we have accumulation here, manipulation. So this is going to go higher, right? We have accumulation, manipulation. If we can get massive displacement, creating an inversion, breaking through this high, when it returns back down into that, you could potentially use the balance price range, market logic execution relative to accumulation, manipulation, distribution. Basically taking a trade once that displacement takes place. Once you identify the manipulation, confirm it by price trading back beyond the high up here, and that return back into it. Maybe it's a breaker in there, maybe it's a bullish order block, right? The down movements here, or maybe that once it's violated creates a bullish order block. Yeah. So we're trading into this. Let's see how the reaction is here. chat. Okay, appreciate y'all hopping on with me today. I think we've done a pretty reasonable job today, given the circumstances. Called out a couple of really profitable trades. Pointed out one trade that may have not worked out, right? Like this one in here. But again, we don't know how far it's going to go, right? These are things that are against us. We don't know how far it's going to go. We've had a decoupled market today for the most part. We've had rapid overnight session, right? Rapid London session, rapid Asia, rapid AM session, and then a slowdown after 7 a.m. and a news event that was at 7 a.m., which had accumulation, manipulation, then distribution, right? And it's NFP week. So all that stuff on top of us today, you'd be lucky if you don't take a loss. But in this instance, because you guys are part of this community, I called out 3 trades that would have worked out, right? So it depends on whether you have the skill set or understanding to be able to engage, which again, I don't encourage you to, but if it fits whatever it is that you do and you make those decisions on your own, opportunity was present. If you missed the opportunity, there's nothing to be upset about. If you took a loss, right? Say you engaged this finally, right? And that was the only one that you took. If you took a loss, there's nothing to worry about, right? You could have, there's always a way to fix whatever it is that you do damage to, right? If you make like a couple of losses, you don't want to try to get it back in the same day. You could get it back throughout the week. That feeling of I need to get it back is FOMO. And we don't want to have that plaguing us. So this here is going to have to really displace, right? I don't want to see this hang around in here. It seems like we're just now back into consolidation, it seems. We do have SMT here. Let's go flip around and see where that's at. So yeah, we do got SMT. I have it at these highs too. So yeah. So yeah, again, I need some displacement. We have retracement. We're at a discount from this low to that high. So it could be optimal trade entry. Could be setting up for another leg higher. If we lose this low, then that puts these equal lows in jeopardy. Honestly, I wouldn't be surprised given the super fast London session and just Asia and AM session. These lows have a lot of liquidity. They have euphoric liquidity, right? People are trying to chase buys because it's been so aggressive from yesterday to today. Oh, sorry about that. So everybody's thinking, let me buy, let me buy, let me buy, let me buy. So that liquidity with these relative equal lows here, those relative equal lows are also followed up with this gap in here. Right, for now, though, right, it just simply seems like accumulation, start of a new 4-hour candle, manipulation to get us down to a discount from this low to that high, displacement, changing state of delivery, inverting the fair value gap in here. Where's my first presented? Let me refresh real quick. See, that first presented fair value gap is way down there. So yeah, we're well beyond that first presented fair value gap. We're well above previous session or overnight session equilibrium. We're well above the regular trading hours gap. Because they left that regular trading hours gap so wide open, I mean, it's a risk. It's a highly inefficient piece of price delivery down there. But again, we're not going to pick a top just to target that, right? If we start to break down, then you could start to consider trying to come back and fill some of that in. Which, we may get that. We may get it to do so. right? They may have just rammed it up, super aggressive, get everyone thinking buys, and then they try to come back down. It wouldn't be unreasonable for them to do that, right? It wouldn't upset anything on this higher time frame, but it is a possibility. And this is why when people live on these lower time frames, they get hurt because they live on these lower time frames, forgetting that there's another narrative unfolding. So let's pay attention to this real quick. Let's see. So we got a volume imbalance in there. That's interesting. It's from 645. There was a gap in there? What the hell? So yeah, watch this level in here. If it's going to be bearish, it's going to have to really accelerate from this level. Remember, that's an order block with a displacement that overtakes it, right? So this should be a balanced price range. If it's going to go lower, it's going to support that. I still classify this as picking a top, but these equal lows here, we already have buy side taken, so now we got equal lows here that are available. So we may look to try to come down into that. Remember, this is high resistance. So even if this does work out and gets down below to that level, it will most likely deliver in a high resistance capacity. So we got up candles, right? It's a bearish order block. Oh, we like that. We definitely like that. You know, we'll see if that can sustain, right? This wick in here, since it was created, we got to see it respect that midpoint, right? This body can close here and we get another displacement. It's starting to support areas down here to get targeted. Again, the underpinning of the market is bullish. So you need to demand a lot if you're trying to short, right? Because you're picking a top essentially. And you don't want to pick a top or a bottom, right? You want to be with the lion's portion of that delivery. Don't forget to like the video, you guys. Subscribe to the channel if you haven't already. Definitely helps me and helps the channel and helps me help other people. And it makes me motivated to keep doing this because I don't have to. You know, I could just be privately living my life with my private group. But you know, I enjoy seeing you guys succeed. Students like Tony. I like passing the blessing along, but hey, if people don't want it, then you know, I have no problem being private. But yeah, if you want more of these videos, if you like the content, if you support what I do, don't forget to like the video, subscribe to the channel. It's much appreciated because you guys could be anywhere else, but you decide to be here, and hopefully you guys are getting value. And liking the video shows me that you guys get value. So yeah, that is a pretty dynamic delivery right there. I think that right there, if this continues, will be the start of the sell side being rated. The wick in here, it's going to have to be respected. We don't want to see it go through that if it's bearish. Again, I'm not calling a trade here, right? It's nothing in terms of my model is showing up in here to go short. There could be an argument for this low to that high, right? That being a bearish breaker. But, you know, we're back inside the range here. So, you know, you got a 50-50 shot. But once we leave equilibrium, say it gets beyond, then obviously it becomes a little bit more likely that it's going to keep going. But because it's been so aggressive, you have to consider, you know, what would present you with a sign for the other side to be targeted. You know, we want to stick to bullishness. We'd prefer to see it just to keep going because we're at all-time highs. That's part of the rules. But when it starts to show some signs that it wants to go lower, you still have to consider. So we got this high to that low. That's a bullish breaker there too. this up wick, right? The up candles in here to the low, back to the high. So that should be a balanced price range. We already have this as a balanced price range. We have this mitigation block the price clearly wanted to reach down into. We do got that trend line liquidity. You notice how the high was taken here, but the trend line liquidity, right, and the equal lows have not been taken here for the Dow. Unfinished business is to the short side. The Nasdaq kind of has, I guess, unfinished business down here, equal lows. But the buy side's already been purged once, twice, a third time. So I'd say that if this low here gets violated, that'll be enough for me to want to see if price can't get down and target these equal lows here. Again, this is a counter trend idea if it does get down below that. So you got to adjust your risk accordingly. And again, if it doesn't get down there, then again, it's all buy side. Right? Breaking through here gives us the opportunity, the chance, the probability of a setup forming going to the short side. Right? Unless that trigger is hit, right, we're still looking to see if we can get price to continue to rise. But it's been so aggressive, so it's not beyond the market for all of this to have happened, them slow down, and then not only do they slow down, but they come completely against what happened overnight and early in the AM session and from Asia yesterday. All that liquidity is untapped. They built up even more by just rapidly increasing. So everyone's thinking buy. You know, people look at this chart, they're not thinking, let me go short, right? But we very well may do that once we hit our triggers right here. And then once it does hit that trigger, you know, we don't want to see any of this get really targeted. So it'd be from this low up to, you know, the low of this too, or you could just simply go above this fair value gap there, which is here. Let's think about it. We have been going from, you know, drop higher, bullish order block, bullish mitigation block, bullish inversion, fair value gaps, all being respected, fair value gaps being left open, highs being taken. We'll be going from that to lows being taken, highs are failing to be taken, bearish order blocks holding, bearish order blocks holding, up wicks holding, down wicks holding to the short side. Bearish breakers are now forming, right? Balanced price ranges are being given up to the short side. Buy side's been taken, sell side has really not, right? It's only been slightly tapped. So you start to see the rollover, right? When things start to get triggered. But this is a thing. You have to wait. You know, you have to wait for these things, which is a testament to the fact that not every moment in price is time to take a trade. It's just not. You know, it could be if that's what you want to do, right? You can make your own decisions, right? You could do what you want. You could choose to, you know, take this information and try to see if there's validity or not. But, you know, this is the reality, you know, whether we want it to be or not. And you don't want to be the person that makes money, then loses it all, makes money, loses it all. When in reality, that could be stopped by you knowing when to trade, when not to trade. And we talk about those scenarios on this channel and in my private group all the time. I'm live every single day breaking down what the condition is, what to look for, you know, what we're looking for, what the narrative is, what upsets the narrative, you know, where entries are, how to find an entry, how to form an entry, how to frame the entry, how to frame the risk, right? The mindset, right? Validation, invalidation. All these things are talked about every single day here. So, you know, I'm happy to see that it's stuck in many of you. And some of you guys that are new, you know, you just got to stick around for a little while. And it's very sticky stuff that I talk about. Like once you see certain things that I talk about, you can't disregard them. Anytime you look at the market, you'll be thinking these things because it's just so visually, blatantly obvious that certain stuff is unfolding. And then when you consider the opposing perspective, right, like the normal retail concepts, right, they see this as a bull flag too, right? We have equal lows down here that haven't really been tapped. Wouldn't it make sense for the bull flag people to get violated? Right? It's already been really bullish. They've already purged out buy side liquidity. Right? Can it still go up? Of course. Right? Has it fully invalidated the fact that this is going to, continue to go higher? It hasn't. Right? Not yet. But if this low gets violated, this is a fake bull flag, and we'll look to also justify using that logic, justify these lows. And again, assuming that, say it fails to break down below this level, which is the trigger, we have no problem getting back in line with bullishness, right? Because that's what the narrative is. And we're still respecting this down movement, up movement, bullish breaker, right? High to low. Go to the 5-minute chart. We've got the breaker. High, low, higher high. It's also a bullish order block. Right there. We got a pretty solid break above. Look at the condition we're trading in right now. It went from this to this. This is what ICT and me, right? Like, this is what we talk about. When there's a fast previous session, that'll help you determine whether it's worth you participating like in a normal capacity in the New York session, right? In the AM session, at least. PM session might offer smoother moves. But this is what you can expect. If you had a fast AM, like pre-market or fast first 30 minutes, or a fast London or a fast Asia session, going into the next day, you can expect this. How many times have we talked about this? I've mentioned this numerous times. Oh yeah, Phil's been in the building. We identified him like an hour ago. It's been the jerkiness has been just off the hook, right? And it's because everyone's trying to catch buys. Everyone's trying to pick a top. Everyone's trying to continue to get in line with a continuation that rallies higher, right? So with that being the case, and it was very fast, they slowed price down, rejected, went to a discount, gave a little bit of a displacement to make people feel like, oh, this is going to come back in. What was happening previously is going to come back in. And then now it's rejected to a deep retracement. This deep retracement behavior is also another way to identify that we're in high resistance. We may continue to gravitate up to the buy side. We'll see what happens. But again, this is totally to be expected. We talked about AM session might be a little bit tricky because of the fast-paced previous sessions. Right? We may see a little bit of hardship, right? It may be back and forth. It may want to weaponize, the fast-paced previous session. And it's done just that. It didn't necessarily attack sell side as aggressively as I assume that they might, right? Which is take out this low down here. We came down and failed. So we may eventually get down here. PM session may get us to target the sell side right there. I wouldn't be surprised if the lunch hour ends up punching us down there too. Maybe even right now, right? Because it's a macro, 750 to 810. So we may get this macro to actually deliver us through to the sell side here. These are equal lows. These are equal lows. Is the upside filled with smoother edges, or is the downside filled with smoother edges? Has the buy side been worked so far, or the sell side? Right? Who's winning right now? Sell side. Again, this looks like a bull flag. So what do you think retail's thinking? Oh, it's going to go higher. Right? It's going to go higher. It has to go higher. We're creating higher highs and higher lows. Higher highs, higher lows. That is going to be weaponized. I'm pretty sure. Right? This right here is making me feel like this is pretty likely. Maybe it happens soon. Maybe it happens in PM session. But I think it's pretty likely that this is going to be something that fails for retail, for the bull flag. Higher lows, higher highs, higher lows, higher highs, right? So this trend line liquidity being engineered here too, along with the fact that people think that this is a bull flag. So keeping in mind what retail's thinking, right? Without like demanding that a high is set, right? And you pick a top, right? Just understanding this logic helps you continue to gauge like, all right, well, if this breaks down below this low, that bull flag for retail just failed. So maybe if we get a retracement into that, we could try to catch a short down into this half risk because it's counter trend, right? You should be half risk on all things this week because high resistance, choppy, jerky, highly manipulated behavior, right? All that stuff is present right now. Plus we're in a war, right? The US is dropping bombs, right? Everywhere's, you know, kind of at war right now. So they're going to use that as an excuse. Which again, like I said earlier, I'm pretty surprised the price is actually up where it's at, honestly. But hey, is what it is. So yeah, it looks like we got SMT here. So SMT with the S&P. Oh, the Dow's getting some legs now. So yeah, I wouldn't really trust the SMT here all too much. So yeah, very interesting. Buy side, sell side, buy side again, treat it as a BPR, stop right at the midpoint. That must be random. Then we got buy side, sell side, buy side again, stop right at 50%. That must be random too. This 50% must be random as well. Doesn't mean it's going to hold right here, right? Again, my intention, I would love to see them take this out. I'm not going to demand it though, but I would love to see them wipe this out. These people are winning. I'd love to see this bull flag get upset. Trading against that, I think would be pretty good decision, but the dollar is going lower here, so that may not allow it. It may let the retail crowd, the traditional retail, because we're retail too, but it may let the traditional retail concept work out, but we'll see. I think it's more painful if they drag it down here, especially because it was so aggressive. Everyone is primed. That's what this does. It's priming you to try to buy. So when you get on the chart, right when you wake up and you see massive bullish candles that are just nonstop going to the buy side, your first objective or intention is going to be, oh, well, I'm missing something. I got to take a buy. I got to get in. It's bullish. Oh my gosh, right? And we hit a extension level that I pointed to the other, last hour. Not sure where the hell it went. Where did it go? So right there, why do I have 3 of the same template? That's strange. Yeah, that's kind of strange. Where did my extension go? Huh. Okay, looked at that. That up to there. So we got that extension too. You could see that from this origin of this move, we have a high, low that took stops, break above the high. So that's a balanced price range and a new smaller dealing range inside the larger one. So to kind of gauge how far this could go, right? We see that 2.5 standard deviation. When we hit that extension level, a lot of times that's when retracements happen, right? This was on the larger swing, or from that larger time frame. You could see that it tagged that and then it, rejected from there too. I called this last week. I had this mapped out since last week too. But we have all the way up to this level up here for this price leg. Right, it's just the standard deviations from a particular dealing range. So we could get all the way up into this level. But again, I am very curious to see if they're going to try to punish shorts. or punish the buy side down here. Again, it is respecting the wicks in here though, so there's really nothing telling us that it's technically going to go down there. So, you know, we'll stick to continuing to try to see if this could push higher. But yeah, it had a chance, right? Had a chance to try to get down there if it would have taken this low. Obviously, it's denying that. So now we have a high, low, higher high. So that's a bullish breaker here. So if I was looking to try to consider a reason to get into continuation, right, this would be something that I would be observing, right? Because that's a bullish breaker. So as long as it stays above this level here, the order flow is going to continue to go. We got balanced price range being respected. We have retracement, respecting that balanced price range. We got a new breaker forming here on this 1 minute, right? It looks like we are just going to retrace it into that. If you look at its brother and sister over here, the Dow and the S&P, all of them are moving through to the buy side. So we will continue to see price race to the buy side. As long as we do not get below this low here. If we get below this, well, not the low, but if we get below this breaker level, which is a breaker, let's see how far it goes. It's a breaker on the 2-minute chart. If we go to the 15-second chart, we could see a market maker buy model framework, accumulation or consolidation, accumulation, smart money reversal, accumulation or distribution, possible redistribution here. It should be fast. We shouldn't get below this level here, let alone the breaker, at least for this lower time frame. But again, this is subservient to what's happening on those upper time frames. This is just for precision, right? We don't use these super low time frames for anything more than that, other than like precision and maybe super short-term liquidity. Since this is in the second stage distribution phase, it should be very quick to get above that high. Man, I don't know if I'm getting sick. I don't know what's happening. Yeah, it looks like that's pretty nice. It's pretty beautiful. Trendline liquidity. So you could see some of the conflicts that happen in my mind, and I'm sure they happen in yours as well when it comes to all-time high trading, when it comes to consolidation, when it comes to price being a little bit more tricky, right, and not really being too 100% on the side of one side or the other. Obviously, it's one-sided bullishness, right? We're still bullish. We've been anchored in the higher time frame bullishness, and if there was reasons, whenever there has been reasons for us to try to position with a upside move, you guys have heard me point it out. You guys have heard me point out things that if they get taken out would make me interested in trying to take a short, right, against the bullish trend. But those things didn't manifest, right? I've laid them out. They attempted to manifest, right? Anyone that picks tops would have got smashed right here, right? Anyone that picks tops would have got smashed right here, right? Just, same thing with this, right? If you just thought, oh, it's going to go lower because I just feel like it's going to go lower. And there's a retracement there. It came off the high. Oh, it must be a retracement to go lower. If you just assume that when you're in a bullish trend and we have not sincerely broken significant levels multiple times, right? Or at least taken out a larger level like this, it's very risky in a all-time high market to try to pick a top, because who says that it needs to top out? Nobody, right? This is a little bit reasonable for us to anticipate a retracement because we're at an extension level, a 2.5 standard deviation. For whatever reason, that 2.5 standard deviation is very consistent when it comes to identifying not only target, but also a moment in price where an expansion can start to reverse a little bit. And this is a fractal idea, right? Like it happens on the lower time frames as well. Right? Like we have this in here, right? We have an extension that aligns with that larger extension, right? Can also use this, right, for a smaller perspective. We have a low and a high. 2.5 standard deviation for this small market maker buy model would be up here. You notice how that extension level was tagged, the very first one? Something you could do too with market maker models, right? If you take this high to that low, right, the little piece of price delivery that began, oh, here, we could actually go with that one, right? Because this high and that low is the specific piece of price delivery that was responsible for the origin of this retracement. So you take that high and that low, right? And you measure it out. Look at how perfect that was for the sell side of the market maker buy model. And then you got this high and that low for the buy side of the market maker buy model. So you can measure out market maker models with this extension tactic, but you got to practice it, right? You got to practice positioning correctly on the right highs and lows. But hopefully what I just described and what I'm visually showing you guys here shows you some sauce, right? This is highly effective. And you could use it in market maker models. You could use it for just normal extensions and whatever. Reasonable anticipation for where price could retrace, especially if these extension levels align with a PD array. But again, the placement is highly important. It's very, very important. And you want to identify the levels, the high and the lows that are part of the actual turn, right? So if price is going higher and, say you're looking for this to be a market maker buy model, right? But you're looking to gauge the sell side. You take this high and that low because that's the high and the low that was part of the reversal or turnaround. Obviously, if you move up in time frame, you get a larger one like this, right? So it kind of adjusts it a little bit. Let me try something real quick. Yeah, so if you take the bodies instead of the wicks, and you measure the high extreme here from the body to the low extreme here to the body, you get that same exact extension too, right? If you take this high extreme to that low extreme, you get that extension level there too, right? The wicks could sometimes be deceiving, but you want to measure both. But if you think it's going to go lower to go higher, right, you should already have a good feel for where it could reach for. You just couple the retracement with a PD array at a discount, like in this range here, right? Discount, bullish order block, right? Price went down there. That's another way to anticipate like where price could reach for, right? Relative to premium and discount. But again, you'll pick your tool, your weapon, your way of doing things, but hopefully I'm giving you some options, right? That makes sense. Whichever one sticks the most, you stick to it. So yeah, we got high resistance in here, right? So this high resistance liquidity pool, it's a stop run, it's a consolidation. Price ran up into it, and instead of flying through it like we've talked about before, this is what is called deferred liquidity. So it came up and hit it. Go to the 30-second chart. The 30-second chart shows that we swept out a low. So now this became low resistance. So if it's going to continue to get up there, this should have really no problem slicing through this high up here. And again, it's second stage distribution in this 30-second market maker buy model. Again, if you guys get value from this content, I share nothing but gems constantly all the time. If you appreciate what I do, definitely like the video, subscribe to the channel. If you haven't already, right? And after the call, if you guys feel inclined to do so, definitely DM me and tell me what the most valuable thing was from the call. Or if you've been with me for a while, definitely send me a DM telling me what the most valuable stuff has been since you have first been following me. Because I think that what we do here is unrivaled. ICT's concepts are absolutely unbelievably amazing, right? Just depends on how you use them. And in the hands of someone that's experienced, that knows what's going on, this stuff can really, really be a huge blessing to you and your family. There's never a guarantee, but again, weapons are only as useful as the operator allows them to be, right? And the experience of the operator generally determines the effectiveness of a tool or tools. So, and that's highly true in trading. Just goes back to, you can learn anything and everything that someone teaches, but if you don't adopt the right mindset, if you don't know how to use the tool, the techniques, you don't know how to manage your mindset or risk management, it could still lead you to ruin, right, if you don't do it properly. So yeah, in this instance, right, we got high, low, higher high. Got a bullish order block there. We have a bullish order block here. Why this one and not this one? The wick's lower. Shouldn't I use the one that has a lower wick? No, you use the one that has a lower body. Okay. You consider the wick, of course, but the bodies is what's important, because that's true price. Wicks are manipulation. So this order block here, if it trades into that, it should be dynamic unless it takes this out without needing to come down, which could be the case. But again, it engineered low resistance liquidity here. It was high resistance here. So what happened when it traded into it? It rejected, right? Pretty solidly to show strong resistance, right? Support and resistance. The bull flag traders have definitely been favored today, right? They got pretty favorable move. It just shows that, it's a pretty cool correlation here, right? If retail logic aligns with something that ICT teaches, you can figure out the times when retail concepts work properly. But if you mix both, like retail, normal retail, and ICT concepts, you eventually realize that you could just use ICT concepts, get all the stuff off your chart, not worry about everything that normal retail imposes on you. So yeah, we're getting a rejection block here on this 15-minute chart with the Dow. If this next candle can't break through that, we got to watch what that's going to turn into. You notice how this rejection block didn't hold, but what it did do is set up a bullish order block. Okay, so if we go to the 1 hour, we got this wick. Oh, wait a minute. Is that extension from here? Oh, yeah. So that extension was from this level. Let's see, yeah. Yeah, so we basically tapped into this yellow box, which is part of the extension from this low to that high from last week. I mean, we can honestly make another argument too for this here. Right, for this low to that high, the more recent, this low to that high. Fib extensions are up there as well. So this level up here is extension level, right? So the standard deviations or measured moves, if you will, this is a level where you can expect that retracement may take place. And we've already seen that, right? It ran up into that level in a hurry overnight and through AM session and, for Asia too, right? It's been rapidly moving higher. And so now that we've tagged this, right, we've seen somewhat of a stutter effect, right? It hit a reasonable level to anticipate a retracement. And we've seen just that, right? It retraced a little bit. It hasn't done a lot of retracement, so it's not like, oh, it's going to turn entirely. We still need to see things like this get violated. I'd prefer, if I'm going to look to target these equal lows here, well, down here, if we're going to even consider that, it's going to have to really displace. Otherwise, it's just continuing to respect buy-side delivery, order blocks. Look at how many order blocks have been respected to the buy side versus order blocks that have been respected to the sell side. There's like none. It's only bullish order blocks being respected. So is that indicative of you trying to go short? Is that like screaming to you that you should pick a top? I don't think so. Order blocks, fair value gaps, and wicks, and how price continuously behaves relative to one another in a price leg and how it associates with buy side or sell side delivery. These are all components of being able to determine order flow. It's not rocket science, right? It's stuff that you can observe on every single time frame. And it's happening on every minute of every hour, every single time frame. And it's just something that over time you get accustomed to. But we talk about it a lot here, so you guys hopefully have been getting better at it. Again, this breaker here was pretty solid, right? It came right down into it. We pointed out that breaker. Prices basically offered another 20-point move, 30 points. From this high, where's the... There it is. So that was another move right there that worked out pretty nicely. Yeah, I didn't realize that it's 8:20 already. Well, I guess I've kept you guys here long enough. I hope you guys have learned some stuff today. Let me see. This helps in anticipation of a move. Sorry, I just saw your comment, Mike. Price can returns. Yeah, 100%. I think you were talking about the extension levels. 100%. You see it all the time too, Mike, because you're in my private group. You see it constantly. All of you guys in my private group see what we do every single day, and it works, right? Like it just works, and it's very liberating. It's not rocket science. I don't make things too complicated, right? I obviously am pursuing professionalism as a trader and excellence. So excellence doesn't come from just A, B, C, D, right? It comes from a depth of layered knowledge over time that you then obviously turn into a model and you gain experience applying, right? And I try to share that with you guys here. And a lot of you guys have been getting a lot of value, lots of progress, lots of funded accounts and withdrawals occurring. I get DMs every single day. So it just works. You know what I mean? It just works. And you have to work, right? You have to do the work. You have to get in there because I make you find yourself, right? I keep you in the rails, right? I try to guide you. But at the end of the day, I'm not just forcing you into a mold. So you have to do the work. You have to. Otherwise, you'll be frustrated and not get any value. But then again, that's a good thing because if you don't change the mindset, right, you're not going to be able to be successful. And I'm on YouTube and doing things privately with students who, want to work with me on a closer basis. I do this to help. I don't have to do this. I didn't always teach stuff. I didn't even think I was going to come out and teach stuff. But I helped a couple of people, when I first started really getting profitability. And then I saw what I was teaching, work for them. I saw it opening the doors, right? It opened it for me. I had to dumb things down for myself and teach myself how to do stuff in a simplistic manner. Otherwise, I was not going to be able to succeed. And then I met two of my other mentors outside of ICT who both have over 12 years experience using ICT's concepts. And they showed me, ways to do things. They helped me find myself. And I take that information, that perspective, those things that I've gathered over the years, plus my own experience, and I'd share it with you guys to try to pull you along. But I was taught in a way that forced me to do the work, just like how ICT teaches everyone, right? Like he doesn't give signals, right? He doesn't turn you into a drug addict, okay, when it comes to signals. He makes you go and do the study. He makes you get your hands dirty. And as a result, there's more profitable students in the ICT community than there are in any other school of thought. And you can argue with it, but just go look. Every single prop firm, even the Robbins Cup, has 2 ICT traders that have been on the leaderboard top 10 for over 12 years or 11 years, which is insane. Most people don't know this because they don't really look at some of these competitions. They don't pay attention. They're just like TikTok brain mentality. So they just look at everything at surface value, don't even do any deep research. When you do research and you stop listening to people's opinions, you realize that what we have here is absolutely special. And 10, 15, 20 years down the line, or when ICT is not here no more, people are going to look back on the ICT community, ICT concepts, and think, man, that was revolutionary, and it changed the whole entire industry. I mean, how many people are teaching ICT concepts? Supposedly, right? Supposedly teaching. And most of them are frauds. But how many? right? There's so many. And how many do you see publicly proving stuff? Even that is, even that element has so many at this point. Obviously some are better than others. And you have to be able to spot the frauds. But again, I mean, there's a lot of people teaching other things, but the level of precision, the level of consistency and continuity and understanding that's applied from ICT concepts versus others, there's no comparison, like none at all. And again, people can argue with it, but that's just the facts. And if you have evidence proving otherwise, I'd love to see it, but there won't be any. Who has a larger following as well as an educator? ICT, right? I was looking at some statistics, right? I have a lot of YouTube analytic things. ICT has the #1 audience retention and watch time out of every single like trading educator. The amount of people that return to his videos, the volume of people that return is more than every educator. And he just got like extremely popular on social media like a couple years ago. He's been on obviously social media and doing stuff for years, since America Online, since like years and years and years ago, like over a decade ago, 2-3 decades ago, right? But he's just crushing competition, and that's why people attack him. That's why people shit on what he does, because he is destroying people's business. And his students, like me, right? Like a handful of others, which I'm sure you know. We're just out here teaching stuff that works, and it's just the competition is just no competition. They're upset. And most of those people that don't like ICT tried ICT stuff, sees many people succeeding because they're doing the work when the people that are failing just choose not to do the work. They just want to, they want a pattern, they want to engage, and they want to be correct every 5 minutes. And it just doesn't work that way without back testing. They don't want to back test. They're lazy, right? They're like, oh, it's too much work. Okay, well, what you're doing right now, your current situation, is that too much work? Because there's sure not a lot of complaining when it comes to that stuff. But the moment we realize that we have to put in a lot of work to achieve mastery at something where you're not meant to succeed in, it wasn't built for you to day trade and be rich, right? It's meant to siphon money from you, like Warren Buffett says. But for people to think that, that's not going to require work, or to just come into this industry and think, oh, well, it's going to be easy. I mean, there's a total disconnect with reality, So it requires work, but it's worth it. It works. I prove it. Many others prove it. We come out here every day in my private group and every week here on YouTube and showcase the fact that it does work. So just keep your head on the grind. Keep your head in the charts. Learn concepts, study each concept individually, take time, give yourself grace. Because even if it took every one of you right now with where you're at in life, even if it took you 5 years from this day to become successful and achieve all your goals that you've set out to achieve in trading, ask yourself, would it still be worth it? Not that you're going to get there in 5 years. It probably won't take that long for most of you, right? Because, there's enough information pointing you to the right stuff. But it just requires your work. There's enough there to make it so you have the answers. You just have to make sure that you, as the asset, you as the operator, are doing the right things to really water and nurture the skill set, and you as the trader, you as the person, right? Because it is possible, but you just have to allow it to manifest by doing the work, by proving to yourself that you deserve to be successful. Lazy people don't deserve to be successful. If you can't get up, I get up at 3 a.m. every single day. I don't have to, but I get up at 3 a.m. every day to go over things, to look over charts, to study, to do whatever I need to do and prepare. Even on the weekends, 7 days a week, right? I'm up at 3 a.m. Pacific Standard Time. And I've been doing that for 5 years straight. I was never a morning person, but I wanted this so badly. And, it's become such a habit that I just do it. I don't need an alarm. I just get up, and it's just the way that it is. Sometimes I, wake up a little bit late. Like today, I woke up a little bit late, but I'm still showing up to the chart. I'm still focusing on my process. I'm still reviewing my rules. I'm still reviewing my trades. I still back test every single day, 45 minutes every day. Most times it's more because I just get lost in the chart. Just like, and I look at the clock, 3-4 hours passes, and I'm like, holy crap. Like, but this is the lifestyle, right? This is the lifestyle. This is the reality of trading. And just like in the gym, if you want to be fit and you want to stay fit in trading, if you want to stay sharp, if you want to be sharp, you got to maintain it. You got to continuously sharpen the iron. And there's no excuses that are valid. If you have not enough time, then you got to make some adjustments, right? If you want it bad enough, right, and you're willing to make drastic sacrifices like some students have had to do that I've come across, they change their jobs, right? If it's reasonable, like if you don't have a kid or anything, and some types of drastic changes that can open up some time for you to study this. I'm not encouraging you to do any of this, but sometimes this is the type of stuff that it takes. You have to determine that for yourself. And if you want this and you are not going to take no for an answer, like for me and many others, right when I first tasted trading, I was like, yep, this is it. If I can't do this, I'm going to be homeless. So it's either homeless and unsuccessful and miserable, or do this and pour in everything I possibly can into this skill set so I can master it. So I gave myself those two choices. And obviously I chose the other choice, to pour my all into this, do whatever it takes, wake up at 3 a.m., not waste my money on shit, right? Eat top ramen to save money, right? Never go out to eat until I could save money. Cut shit that I don't need to only fund necessities, but then also, any enjoyment stuff, put it to the side so I could fund what I needed to fund, while I was learning. I changed jobs twice to try to open up time for myself. I got laid off from one, right? And then during COVID, right, everybody was forced to stay, in their house. So I just poured everything I had into this, and I had a child on the way, and it was just chaos. But I still didn't allow any excuses to deter me, and then fast forward to today, anything that I've lost, I've made it back times 10. I don't need to work, right? I don't have a necessity to do these things. And it's going on year 7 this year, right? In August 7th. It's going to be 7 years of my life that I've done this. 5 of which have had drastic sacrifices. I lost at least $40,000 trying to learn this because I was stubborn. I would not allow myself to just trade demo. I was in a hurry. I had chaos unfolding in my life. But the sacrifices that I needed to make, I was willing to make. I didn't care what it was. Right? And again, you have to think about these things. It takes a lot to succeed in this industry. You know what I mean? It's not something that you're just going to walk in here and crush the smartest, most lethal, most greedy, powerful minds in the world. You think you're going to come into their casino and just rob them without paying a price first to like as you learn? You're not going to. And some people can't accept that. Some people think they're the exception. Some people show up and they, were in college, or they have always succeeded in their life. They think they're geniuses, or, they've always done so well, or they've came from money or whatever. And they think they're going to be the exception. And they wake up one day and realize, holy shit, my bank account is drained. I just got totally humbled. So they're either going to have a choice. They're going to either quit, or they're going to humble themselves and do what's required and realize that they're not the exception. Nobody is exempt. You're not exempt. The ICT is not exempt. Nobody is exempt from being totally obliterated by the marketplace if you don't respect risk and do the right things and put in the work that's required so you could be prepared for battle in this battlefield. It's a financial battlefield. It's a war constantly. A war against other traders, a war against big institutions, And most importantly, it's a war against yourself. You know, your habitual thinking. Are you negative? Do you have negative people around you? Do you live a toxic lifestyle? These are all things that you got to consider, you know, what kind of sacrifice you're going to have to make to be able to really get yourself in alignment, right? From lifestyle changes to friends to the work that's required. You know, all of this is required if you're trying to buy. Basically, we're buying our freedom back. Can you just think about it? You think the government and all these people that run this stuff, this algorithm was created for you to just escape what they have everyone boxed into, what they want everyone to be doing, and just work your whole life just to be broke and retire with like no money, right? And just live a miserable life. Or maybe you're successful in your job, but you work 15 hours a day. You don't even get to spend time or do fun stuff. And then by the time you wake up, you're 80 years, 60, 80, you know, however old you are when you retire, and you don't have any energy, your youthfulness is stripped. You spent your whole life trying to build a future so you could enjoy it later on. And then come to find out when you reach that retirement age, you don't have the energy. You're lazy. You might have health problems. So all the good years of your life was, you know, essentially given away to an employer that, you know, is going to replace you the moment that they feel they need to. Or when you retire, someone else is going to fill that role so they can go live and be rich and live the lifestyle you dream of. You know, you're funding someone else's dream. There's nothing wrong with jobs, right? Everyone needs them, right? But you should look at them as a tool, unless you love your job, right? Some people do. And there's nothing against that, right? Jobs are not bad. It's just, it depends on you as the person, right? And what kind of job you are allowing yourself to work at, right? Everyone has their own opinions, but that's my opinion. And I could not sleep at night. Once I tasted trading and tasted the fact that there is another way out, I could not rest thinking about the fact that, dude, there's an option. I just have to go all out and I could potentially escape like the normalities in life that everyone complains about, from your family, your friends, your grandparents. You know, everyone complains about jobs. And if there's a way out, would you really not be willing to do whatever it took? If you know there's a way out and multiple people have succeeded and it clearly is possible, given that opportunity, would you really argue with yourself and say that it's not worth it? Oh, I'm too tired. I don't have time. All this BS. Is any excuse in that instance valid when you think about it from this perspective? It wasn't to me. Zero excuses were valid to me. And the ones that make excuses, to someone like me, to someone like ICT or any of these other traders that have really done the sacrifices and put in the work, no excuse is valid. You know, I could come up with all these different excuses, right? Failing relationship, I had COVID, I lost my job, I was homeless when I was younger, don't have a dad, you know, I didn't come from money. I mean, how many excuses would you want to use to make it justify that you don't pursue your goals? You know, with all the different things that I could list off, I didn't allow any of those excuses to convince me that this was not worth doing, that my time was going to be wasted trying to pursue something that is obviously possible. But I had to change. I had to change my lifestyle. I had to change who I associated with, the way that I thought, the thinking I had, the way I perceived myself, the way I perceived money, you know, just basically the whole world had to look different to me. I had to change it all while making no excuses, while still going through the struggles in life, the things that we all face. You know what I mean? But I was able to go through it and, you know, still never make excuses because, you know, I know that it's possible. I've known that it's possible. I've proven that it's possible. So no excuse is valid, you know, and there's so many people that have very similar story. I'm not special, right? None of us are special. You know, we all are human beings. We all go through life and have different battles and different things that we have to overcome and certain sacrifices that we have to make. Some have to make more than others, you know, but at the end of the day, we've all had to make a sacrifice to achieve this, right? So no excuse is valid, you know. So I want you guys to think about this stuff. I'll let you guys go. I know I've kept you guys for quite a long time, but I appreciate you guys spending time here. Hopefully, some of this stuff is helpful to some of you. Maybe some of you are going through a hard time. Maybe um, you just don't have time, and life is kind of inching its way towards allowing you to let excuses take over and make you quit, right? Um, hopefully this stuff can kind of inspire you and make it so you see things just a little bit different, you know. But yeah, hopefully everything has made sense today in terms of what we called out. We called out, I think, what, 3, 4 setups that worked out today. We called out this in here for those of you that stuck with me. I called out this breaker here too. We talked about this one once it broke this low. We identified these equal lows down here. I wanted to see if it could get down there, but the daily bullish order block, obviously, higher time frames king. So this low, right, didn't really have much of an effect with the bullish order block on the daily chart. Was it the daily chart? Yeah, bullish order block there. It stayed well above it, right? These lows were at that bullish order block. But when price broke down, we wanted to watch and see if that was going to hold. All right, price came back. Didn't really respect it. It tried to, right? We talked about the midpoint there. So that was something we were watching. I said that only when price gets down to this would I be even considering taking a short. Price ended up getting down into that, right? It ended up stopping this out, right? Give it one more pump fake. Broke down here. This was actually 2022 model, right? We got stop run. I kind of missed that earlier. So stop run there. Shifted market structure, fair value gap. It's also a low, high, lower low. So it's a small breaker as well, right? So that was something that, could have reasonably been identified if you were trying to go short. But again, I was not going to even consider going short until we broke this and then proved respect below it so that we could try to target these. That never proved the respect, right? It came down, right? Once it swept it, it closed up on top of it. And the price came down, gave a rejection here, and then rallied up. We talked about this being a mitigation block, this low, high, low, or failure swing, low, high, failure swing. So that became a mitigation block. I talked about this inversion fair value gap here. I said that if it can return into that, we should be able to get a nice move. So I called that move. So 1, 2, 3, 1. This was invalid. So I guess we'll just we'll say that this wasn't an opportunity. I didn't call this as a short, but I did call that as a buy. That as a buy. Then we saw this happen. We were monitoring this to see if it would respect it. I would have called the short if it did to target the lows for a market maker sell model. Didn't happen. It broke this. So then I called this. So there's 3 opportunities in there that we called out throughout the morning that did play out. I didn't take them because I explained it all throughout the call what my perspective was today. And then once price rallied up there, price came down. We wanted to see how this up movement, down movement was going to be respected in here. Obviously, it failed to respect it. Created another mitigation block in here, low, high, failure swing. So this up delivery in here on a closing basis, price should have respected that, and it did. And then price ended up breaking above this high here, which was a high, low, higher high. If you go to the 2-minute chart. And then I pointed out this bullish breaker here. That bullish breaker, which I said should hold, so you can look at that as another thing that I told you to watch that did play out. So that's like a 4th idea, right? Worked out, never came back down below. Up to this moment, it still hasn't come down, right? It hasn't came down through it. So it's continued to hold. And then we got into our conversation about some of these other things, right? Again, hopefully you guys have gotten value from the entire call. Again, don't forget to like the video, subscribe to the channel. I appreciate all of you guys that do support the channel. I do try to give you guys as much value as possible. So thank you guys for the trust. I know you guys could be anywhere else with other people that may be more entertaining or have a bigger following or whatever the case may be. But the fact that you guys are here, it doesn't go unappreciated. So thank you guys so much. I'm always here to help any of you guys. If you have any questions, please let me know. Like I said earlier, if you guys could do me a favor and let me know what the most impactful thing from this call was. I'd love to see it in a DM. You don't have to post a comment about it. You could do that too. That would be just as helpful as a like on the video for the channel. So if you want to do that, you can do that too. But I'd love to have conversations with each of you and see what stuck the most. What was the most impactful? I think I'm going to do this for every single call that we do, both on Sundays and on Tuesdays. Those of you in my private group, I would really appreciate it if you guys could start doing that as well every day, because we're live every day in my private group. So those of you that are in that group, if you guys could do that. I know some of you guys already do it, but I would definitely like to see more of you do it, just so I can stay connected to all of you. I try my best. I know some of you guys are busy though, but yeah. So if you guys could do that for me, I'd really appreciate it. But again, thank you guys for hopping on, hanging out with me today. Hopefully you got value. Let me know if you guys need anything. And yeah, don't do anything too crazy today. Remember, it's already been pretty rapid. So if you are going to look for anything, I would be continuing to observe the sell side liquidity. I would not be very surprised if PM session did look to try to punish them a little bit, maybe even in this lunch hour, right? We may look to come down and, at a minimum, maybe even take some of this out, because buy side is winning right now, right? They are absolutely crushing it, and shorts have been denied. So yeah, keep that stuff in mind. Again, God bless you guys. Thanks again for all the love and support. Let me know if you guys need anything, and I will catch you beautiful people here on YouTube once again on Sunday. And those of you in my private group, I will see you beautiful people bright and early tomorrow at 3 a.m. As always. Okay? So God bless you guys. Once again, thank you, and have a good rest of your day. Be safe the rest of the session too. All right, peace and love, you guys.